Hey there, my name is Rainer and welcome back to this week's market analysis. So this week, I'd like to share with you a couple of commodity markets, that are actually making multi-year lows, but it's not much in the limelight because I think the media do not find it, I would say popular news to sell to traders or investors. So nonetheless, these two commodity markets are markets I'm watching closely. So I'd like to share with you what they are, and as well as cover a couple of dollar pairs which I think provide a decent shorting opportunity this week. So all that and more in this week's market analysis. So let's rock. Alright, so this is the chart of Euro Dollar weekly, and looking at which, we can see that, price is still clearly in a downtrend, right? We see lower lows and lower highs, right? I can mark out, I think the high of 1.4 over here, then price traded much lower with this strong impulse move towards the downside. Then it consolidated for a while before another impulse move towards the downside. We had I would say 3 or 4 weeks of retracement over here, another impulse move towards the downside. And looking at which, we had another 3 weeks of retracement, and I think this week what we had was, a potential move towards the downside once more. We have this, let me clear it, we have this bearish engulfing pattern. Alright, this bearish engulfing pattern which closed lower compared to the last 2 weeks. So this could be a potential trigger, for a further slide below in the coming weeks. So nonetheless, let's look at, the daily chart, right? It's very clear, you see over here, right? I think I point out in the Facebook trading group, I say the 20 and 50 period moving average is the area to look out for because price has been respecting this area since forever, right? Since I think, 2014 August, which is around here, it has been respecting till, I would say, up to date, right? So price, what it did before it went lower was we had this, I would say a potential double top here, alright, tested once. This level, I think there's another second time we tested, third time we tested before the slide lower, right? Looks like an M right now, right? So, yep, that aside, right? As for trading opportunities, alright, I usually like to trade the 4 hours, and here's how I will go about, looking to trade the euro dollar towards the downside. We see that, there was this, I would say, a swing support level over here, right? And price broke down of it this week. So I would say, those who went long already probably stopped out, right? Those who went long probably had their stops below here, got stopped out. And I would say the bears are really in control right now, right? So longer term trend is towards the downside. I would say the current momentum is also shifted towards the downside. So I would say the next area to potentially look out for is this level where price could potentially test. And how I look to trade the euro dollar is this. So in the coming weeks, alright, we do not see on the forward that price is respecting, I would say, the 20 and 50 period moving average, but that's fine, right? Because what it could potentially do is this, right? It could actually do what they call a bear flag, right? Price traded higher before making a move down lower once more. So if that's the case, alright, so this is something I'll look for, right? Potential bear flag in the coming weeks, and I'll place a sell stop order just below this low over here. And I have placed my stops are usually about 2 ATR, and it probably I'm guessing somewhere around here. Alright, so here to here is my stop loss, and I'll look to manage this trade. If I've gotten in short in this trade, I'll look to manage it as price goes along, right? So we'll see how it goes, see whether if I'm triggered. If I'm triggered, I'll share with you, how I'll manage this trade along the way. It's either I probably get stopped out within a couple of days, or it could potentially be a larger move, in the coming weeks or the coming months. So something to share with you over here. So looking at the pound dollar again, weekly chart, you see a similar theme in the pound dollar, alright? So we had this bearish engulfing pattern, alright, and trading causing price to trade. I would say I think multi-year lows, is it? Look at this close over here, right? And this cluster of support over here, right? So possibly, those who went long at support again are once again stopped out, and price triggering at multi-year lows is something to pay attention to. And look at the forward chart. Again, very similar story as the euro dollar, right? You can have the same potential setup, but I would suggest, picking one of the dollar pairs, because you do not want to be trading too many correlated markets, especially when you're dealing with the major currencies of the Forex markets. Because, one thing that could happen is, say, for example, you are short euro dollar, you are short the pound dollar, you are short the Aussie dollar. So basically the theme that is common between these three markets is the dollar theme, right? The dollar theme over here. They are all US dollars. So for example, if you are overexposed to dollar products or anything that happened within the dollar is going to affect all these three currency pairs at once, and your risk will be amplified, right? For example, if you put 1% on euro dollar, 1% on pound dollar, 1% on Aussie dollar, you are in total risking 3% in total, right? So I would say be aware of the correlations of the markets you are trading. And one way to reduce it is to either pick the strongest or weakest pairs to strongest or the weakest markets to trade, right? Strongest if you want to long, the weakest if you want to short. Or what you can do is, diversify your risk across. All right. So if you are like me, risking 1% on each trade, and you have 3 potential products you want to trade, you can risk 0.3% on here, 0.3% on pound dollar, and 0.3% on Aussie dollar. So this way, all these 3 products you add up, right, it's still about 1%. So just something for you to consider, especially when you're trading correlated markets. You do not want your risk to be overexposed, lest, something happen in the dollar, right, where it causes you to, amplify your losses across the board. So something to take note of and beware, right? So up next, DEX, all right. DEX is a market that, I've been watching closely, and I think I did voice out quite a few times. And looking at this chart, this is the chart of DEX, all right. This is chart of DEX, the weekly chart, and looking at this junction, right, when price break out at this resistance over here. Here is the common thought of most traders out there. They will tell you that price is overbought, right? Number one, price is overbought. It cannot go higher because price is already so high, And where they get this analogy or where they this thinking from is, because from young, we are trained to buy things which are cheap and to sell things which are expensive. And clearly at this chart, at this point of time, price looks expensive. But the problem with this mentality is that when you are trading the markets, price is never too high to long or too low to short. And this is something that I've repeated over and over again. And this I would say this chart just emphasized my point once more. All right, price is never too high to long. All right, because you do not know how high is high. So what do? As long as price is making higher highs and higher lows, it's still in an uptrend. Look to long the market, right? Do not anticipate that you reverse or to predict that you will, turn away from the high levels, because I'll be honest with you, you cannot predict where the markets will go. You'll go where you want to go. Doesn't really care what you think or what I think. So an important point to take note of. So this is the market of DEX, all right? And if you look at this point, if you think it's too high, you wouldn't want to have to got long on this market. You may want to check out what happens next. So after which, a few weeks later, look at this, all right? You will miss this entire move upwards, all right? And there are definitely trading opportunities, on DEX. Not on the weekly chart, but if you look at the forward chart, right, there are clear patterns that you could have traded, all right? And the only way that you could have traded these patterns is if you felt that, price is still has, I'll say, the gas to move higher, right? If you had the mentality that, price is already too high, you would not want to get long, then you miss out all these trading opportunities when price come and retest back the 20 and 50 period moving average, right? Because when price is already too high, even though there's a setup that's presented right in front of your eyes, you would be hesitant to take it, because at the back of your mind, you already think it's really too high. I'm not going to long, you fear of the reversal, you fear of the retracement. All the fear in you is going to cause you to hesitate to pull the trigger. So when there's a clear setup like this, the retest of the 20 and 50 period moving average, which I've highlighted over here, I can tell you that you will not take this trade at all, because of the fear, because of the bias that you have created in your mind. So this is something that I want to point out to you. Beware of this bias that I think 90% of traders out there has it. So, price is never too high to long or too low to short. This is a message that I would like to put out across again once more, and take note of it, alright? So this is DEX again. If you are like me who think that, price is still, never too high to long, trading opportunity will be a retest back towards the 20 and 50 period moving average, something that you could look to get long down here on the pullback. So this is DEX, alright? So keep a lookout for it. So now, the commodity markets which I was mentioning about, which is making multi-year lows, alright? The first one, let me present to you, soybeans. Soybeans is a market that, I'll be honest, I don't really know what's the fundamental behind soybeans, but it's making multi-year lows. That's the important thing, alright? So looking back, right, you can see that, this week price traded to, I think you can't see it down here. Let's go to the daily chart, alright? You can see that price traded the low over here, which is, I think, below, even triggered below this low over here and this low over here, alright? So it made a multi-year low over here. So it is definitely significant, because I would say, whenever, when price approaches multi-year highs or lows, there is a fundamental reason behind it. And I think, if you go to the internet, you can find out what the fundamental reason is. But that is not my concern. My concern is, if price is approaching multi-year highs and lows, I'll be ready to, to trade the markets, already be looking to, get long or short the market. So looking at soybeans, also look at the daily chart. You see this pattern over here where price did a high over here. Then we have a lower high over here, once more over here, and once more over here. And being supported by this support level over here. So what you get in, I would say, traditional technical analysis form is something like this, right? You have this support floor level, then you have this highs, lower highs, lower highs, lower highs. So traditional technical analysis, right? This is not 100%. This is only putting the probabilities in your favor, right? Is that price would then have a tendency to break below the support and possibly trade lower. This is just the probabilities and something to take note of. Right? There's no guarantee, right? There's nothing guarantee about trading, right? It's all about probabilities. So this is a potential scenario that could occur, and it's something that is right in front of your face over here right now. So looking at which trading opportunities at the forward chart, right? You see that price did this impulse move lower, consolidate a little before forming this engulfing pattern over here. So I would say watch in the coming weeks how price react, right? Because if it does a further slight consolidation over here, there's a potential opportunity to play a breakout towards the downside. Because come to think of it logically, right? Just think of it logically from an order flow perspective, right? If this floor support is such a huge strong demand, right? If there is such a huge strong demand for it, price wouldn't be consolidating at support for long. Because the moment price comes to an area of value, a lot of big traders, institutions would scoop up the levels, and push price higher, right? For example, right, you look at this pin bar over here. When price came back and retest this support over here, within a few weeks, price shot up higher, right? Because why? There is a strong demand over here. But what happens when price comes back to this support level and starts consolidating for a while, right? It's telling you that the previous demand that was there previously isn't there anymore. So there is a possibility or a good chance that price could break and trade lower over here. So once more, this week again, I'm looking at the same thing, right? If after a few weeks, right, price is still consolidating, not moving higher, but consolidating at the level of a multi-year support, this gives you important clues that there is a potential for price to trade lower towards the downside. So something to take note of as well on soybeans. And last but not least, natural gas, all right? Another market that nobody talks about because I think it's more of an institution market, right? Retail traders don't trade natural gas, but I'm a trend follower. I trade almost all markets, so I'd like to share with you as well. So natural gas, I'm not sure if I covered that last week, but if you notice this pattern on natural gas is that, it tends to, consolidates here for a while before breaking up higher, slight pullback before breaking up higher. And likewise, over here, it consolidates for a while before, it did a false breakout higher, come back lower once more. So right now, price seems to be consolidating once more. And there's a potential move for it to go back lower and retest this multi-year lows over here. So natural gas, look at the daily chart, alright? It has already, I think it's a 2014 low, alright? Or 2013 multi-year low as well. So this level was taken out. So likewise, it's a very similar pattern as soybeans, right? We have lower highs here, 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 and it's being supported by this support over here. So I'll draw it out something like this. So there's a good chance that price could actually break out lower in the coming weeks. And right, this week price showed that it has already broken out lower with a close of this candle over here. So another product to look out for in the coming weeks and watch if it does trade lower in the weeks and months ahead. So yep, that's all I have for you guys this week, alright? Basically looking across the different markets, looking for trading opportunities, and understanding the price action of the markets, alright? So with that, I wish you guys good luck and good trading. Feel free to leave any comments if you have on my YouTube or on my website. I reply to all comments, all emails. And with that, I wish you guys good luck and good trading. I'll talk to you soon.